morning, everybody. It is Thursday, April 11th. We are just around 4:35 a.m. And once again, futures are flat. I do want to congratulate, as I said, everybody who took on the 5185, 5180 call credit spread on Tuesday going into yesterday's CPI. You obtained $4 in credit. And as you saw there at the end of the day, you closed absolutely zero for full credit. As I posted there at 9:30 in the morning, the safe edges, and it's a great day for an iron condor. And iron condor, yeah, you got $1, which ain't bad, but yep, once again, you're $1, 25% return, nothing wrong with that. And again, they're talking about today being the risk trade on today, and what I'll go over here in a few minutes. This being the biggest risk, the 51.55, 51.60 bullish put credit spread. Buying the 51.55s, selling the 51.60s with a $3 spread. And here's the reason why. Yesterday, you got minus 1%. Okay, now I'm going to run you through this. Your minus 1% day over here on April 4th, your very next day, plus 1%. Now, your minus 1% day, as we knew, was going to be coming on April 2nd. The very next day, only 52, 57, 87 for plus 1%. You only got 52.28. Regardless, we closed green. Same thing over here. On April 5, obviously, we closed green. Go back on to March 5th, minus 1% day. The next day, 51.29.44. We missed it by $1.50. Go back to February 16th, or February 20th, minus 1%. 50.25. Missed it significantly, but we closed green. Come over here to January 31, minus 1% was the FOMC meeting. And your very next two sessions, plus 1%. Go back again to January 17th, minus 1%. Point is, you get the point. After getting a minus 1% day, the algorithm trend has continued to be for a very long period of time that the very next session you get a green close with a high probability of getting a plus 1% move. A plus 1% move today, using the previous day's close, which is the way that it's calculated, would produce 52.12.25, filling your CPI gap and basically eliminating yesterday from ever having taken place. Look on your SPX spreads and, whoa, 42-point gap down. And we didn't do too much after that. I mean, here, I didn't color code it, so I will do it now to make sure I see it very clearly. We didn't even break 40 points yesterday. You had your big April 2nd 39.48 gap down. You didn't even break 25 points that day, which again is why I bring you back to what I kept saying. It's a dip. That's all that it is a dip. And more significantly than these 6,900%, 3,800%, 2,900%, 1,800%, zero DTE trades, I'm more proud of the fact that people have listened when I'm telling you, don't get short, as we had last week Friday and as we had yesterday. Saving yourself from making a big mistake is 10 times more valuable than having missed out on the opportunity. You don't go and get short. As I've kept saying, when we have those take the money alerts that come out, and I am not afraid to go out there and say it, take the money when it's time to go out there and do it, which was, where are we here? All we did was dip. That's all we did. Yeah, 8:43 in the morning. I was already talking about take the money. And I will bring you on to your Charts, which I am not doing it on the small screen today just because I want to see the bigger picture. Here you are, your opening bell, you gap down, and boom, right there, 9:49 in the morning. That's the bottom. The bottom is in. And then right after you had the auction there at 1 o'clock, bam, you got a quick dip, and boom, you got a quick bounce. Nice little volatility. But once again, nothing there that anyone who is not trading futures has an actionable trade to. And you wouldn't be here with me if you were able to trade this kind of 39 Red Bulls, 15 grams of cocaine, complete alertness kind of trading. Totally not worth it. Sit back, zoom in the big picture, suck it all up. 400%, nothing wrong with that. So where we wound up closing at 51.60. And looking here on a bigger, broader picture, like I've said, all we did was dip. That's it. I'll go to a 20-day. All we did was dip. We have our dip, our bottom over here, then that gap unfilled way back over a month ago now. Right down here, and right down here again. Same places, 51.45, 51.35. We've accomplished absolutely nothing. Move over onto your SPY, and as you see, risk trade for today, if you wanted to go and take it yesterday, would be the 515 calls. We have the ECB rate decision coming out here prior to the open, as well as PPI. So today we will get a decision maker, but one of the things I wanted to put out, which is very seldomly discussed, is how bullish yesterday actually was. QQQ was not involved. QQQ held incredibly strong. And because of the way that QQQ held, everybody needs to take that and understand the stock market is the QQQ. The Dow and the Russell, those are your strong arm and your weak arms, but the QQQ is the weight. And when weight doesn't move, the market doesn't move. Weight doesn't report earnings until the end of the month. Now, yes, we can get a little bit of a dip, absolutely. But weight doesn't report earnings until the end of the month. So all that we're playing with right now is a dip. QQQ looks good. Or sorry, IWM looks good. Got the move to 200 that we expected to get. Can we get it under 199.40? That's the question. And I will look over and see as to what. That's not what I want. I want to minimize. Come on, don't make me look like an idiot. Yeah. Duh. Futures are flat, but I bring you over to the left screen. And what I'm looking to show you here is big trouble. Big trouble in tranny land. Trannies are in big trouble. Big drop over here on the trannies. And that's the same reason why when we bring over the other screen, FedEx got our 267. That's what we were looking for. That's what we got. Played perfectly out. If you want to still be involved in Federal Express, the good thing is you got to know all about Federal Express. So now you know how Federal Express moves, and you know how easy it is to be able to make money on Federal Express. So back over here onto the trannies. Trannies, big trouble. We'll keep it on here. The TLT, big trouble. Now starting to see a big move around TLT, which we're not getting too much of yesterday over on the TNX, which I'll go over. But the bigger warning was what we had yesterday there was yen, your big break above that October 2022, and that big move over here on the dollar. Now, none of these were supported by the TNX. TNX didn't support any of this. That's why, once again, caution on the bearish side continued to be in play. And as we go into today with futures the way that they are, we have nothing to get ahead of ourselves with until the ECB rate decision and PPI come out, which are two of our main components for today. After that, we have we have the ECB rate decision, we have PPI, we get jobless claims. Guess what happens at 11:30? We have the 4-week bill auction. Very much nothing. But at 1 o'clock, you have both the 30-year bond and the reverse repo, and you get Fed's Bostic. And as a little bit of a joke here, the conspiracy theory about how somebody within the Fed is leaking information out, and also how Jerome Powell is, anti-Trump, and that's why he started raising rates. It's a great conspiracy theory if you really wanted to dig into that. It's the same conspiracy theory that these traders who were pricing in 5 rate cuts during the course of 2024 are now pushing back the first full quarter basis point by the Bank of England to November. Money markets are pricing in a 75 basis points of rate cuts in the ECB this year, which was previously 100, which was previously 125, which was previously 150. And UBS expects the Federal Reserve to start cutting interest rates in September versus the prior forecast of June. Sorry to tell you guys, but it's rate hikes that are coming this year, not rate cuts. And again, because we are going to be looking at the ECB and PPI, and once again, all of your data supporting very much that today we have a green close, a close above 51.60.64. The data is also supportive that you could see that visit up to 52.12.25. So might not be the best credit in the world, taking a risk on and getting yourself, $3 credit on the 51.60, 51.55s. But that's the trade that's out there. That's the trade to be taken. And one last thing I will leave you with, let me get off here, is the VIX. I can't scream loud enough about VIX 1622. And as you've seen now multiple times going back to last week, the warnings about VIX 1622 and what takes place. Now we are coming up here and doing very, very, very similar to what we were doing in October as we were producing the bottom there on October 27th, where we were getting lower lows on the SPX, but we were getting lower highs on the VIX. I hate to open up the conspiracy book, but the conspiracy theory book actually is leaning a little bit towards that bullish sentiment where you could be looking at SPX 5300 before we do see anything that starts, really breaking down. So anyway, guys, we will see what we have after PPI and the ECB rate decision. And again, data supports us to be going up, but this is definitely not one of those things where, as you have seen, the big money has been paying off consistently, playing the short leg, playing the puts. Have a great morning. Have a wonderful Thursday. And if you parents really want a conspiracy theory to dig into, I got one for you right here.
Have you seen the comparison of the Nickelodeon symbol to the shape of Epstein Island?